Manishi Raychaudhuri is Chief Executive Officer at Emmer Capital Partners. Is with us to take some questions. Manishi, good to have you with us here. Positioning was light, and there is a lot of covering, etc., which will take place. But how do you assess the, not very long term, but I mean medium to even slightly nearer term outlook for the markets from here? Because there's that US-China as well, around which we will get more clarity, and that can provide more risk on. What's your sense?
Absolutely. The best part of the market now is that there are many stars which are aligning together. So on the one hand, we have the first round of talks between US and China, which, it'll obviously take a long time for them to reach a final agreement. But it's clear that, the fact that talks are happening is the first step towards a potential agreement, and therefore the first step towards reducing the kind of uncertainty that prevails across the world. Simultaneously, we have had some of the pronouncements from the large tech companies in North Asia, which seems to indicate that the bullishness and the kind of capital spending that's happening on AI and other areas are likely to continue. We have seen those commentaries from TSMC and some of the other Korean companies. Third, in India, the military skirmishes are now behind us, and the market is looking forward to more stability on that front also. We're kind of more than halfway through the result season. It's been mixed, but it hasn't turned out to be as bad as some market participants might have apprehended. So it's a combination of all these things which are driving the entire emerging markets higher. And add to that the fact that there is now the reverse flow happening from the United States back into the emerging markets, which is clearly visible in how the US dollar is behaving. Put all this together, it's actually a good time for Asian markets and specifically for India too.
Okay, good time for Asian markets and for India. Manishi, thanks very much for joining in. Indeed, it's been a good time. I mean, given all the turbulence, April was a good month. May, we got hit by this geopolitical issue out of nowhere, and yet the market has managed to march on. So indeed, the question is, have we sort of seen the best for the year, or is this just a base building for things to really pick up in the second half? What's your sense?
My guess is going forward, I think the market performance would be more in line with the kind of earnings growth that we are likely to see. And that for fiscal 26 or even for fiscal 27 would possibly be in the early double digits to mid-teens, so somewhere around maybe 12 to 14%. Valuation in India does not still give a lot of comfort. It is trading at about 20 times or so 1 year forward, which is slightly higher than the long-term average that the major indices have traded at. And I think, so that is something investors would have to be a bit careful about. So I think the way to trade India would be in terms of very careful stock selection, avoiding the very highly valued sectors and stocks, because in case of a US recession, as we have seen historically, it's actually the expensive stocks that take a beating. Much of the downdraft into the market arises from valuation decline and not so much from earnings estimate decline. So, if investors focus on careful stock selection with the strong growth objectives and reasonable valuation, I think there is significant opportunity to be taken advantage of in this market.
So where are the opportunities then, Manishi? Give us the top couple of themes that you're betting on.
Right. I will name three sectors. And they're not too different from what I said. I think it was on your channel about a month ago. Number one, the private sector banks. I have long been a fan of Indian financials. If you look at the longer term, the penetration of banks, organized sector financials is nowhere near complete. And the private sector banks are the ones which would gain market share. Second, I would also focus on consumer discretionary. This is more of a medium-term theme. there's money coming into the hands of Indian taxpayers and also in the hands of the Indian government servants. So consumer discretionaries, including autos, including the EMS plays, they all fit into this bill. Third, I would also point out industrials, including defense. And in fact, this enhanced defense spending across the world is going to be a global theme for the foreseeable time horizon. We have seen it in Europe. We are going to see it in Asia, in particular in India. And I think the government's focus on infrastructure and the government spending momentum is also coming back after a brief lull during the election year. So these are the three sectors I would point out in particular.
Okay. Those are some of the specific areas. On pharma in specific, what's the sense? Because the news coming out of the US seems to be that obviously they're looking at bringing drug costs lower for Americans.
Right.
Now, it seems that this order that he's speaking of, Mr. Donald Trump, that he's going to sign today, that's going to be more for manufacturers of patented medicines. But then if patented medicine prices go down, then it's obvious that their generic version prices will also have to be lowered. How are you looking at pharma, given the very close linkages to the US market?
Right. So, one doesn't know exactly what this order would entail. But what you pointed out just now is right. I mean, if patented medicine prices are forced down, obviously generic prices would also have to follow suit. But I would point out that, one avenue of lowering healthcare costs in the United States is actually to focus more and more towards generic medicine. So if that is indeed the case, then while prices may see a downdraft, generic medicines could be used a lot more, and therefore, in the longer term, these Indian generic manufacturers could turn out to be gainers. But for the present point in time, we simply don't know what would be the contours of this, this new order or new agreement would be.
No, I absolutely. Manishi, just a quick word. Actually, we should just quickly put up Sun Pharma, and we were just sort of mentioning that it's down in a pronounced way. It's not as if other pharma stocks are higher, they're down, but it's an outsized cut on Sun. You can think of a reason why, Manishi? Anything specific with Sun?
I wouldn't comment on stock specifics, but I guess that's the biggest generic player. That's the simple reason here.
Okay, all right. So that's about it. Thank you very much, Manishi. I had more questions, but slightly out of time here. 24,585 is where the Nifty is at. So it's a very strong start. And with 15 minutes out, we are holding on to the starting gains. Surabhi.
Oh.